Happy Friday, traders. It's 8:02 a.m. Chicago time on Friday, the 17th of July, 2020. Believe it or not, we're halfway through the month already. Man, as I'm getting older, it just seems like I'm living in an accelerated time span or something. Anyway, thanks for joining me for another Friday broadcast. We are on episode number 1799. We are hitting the 800 mark on Monday. Uh, Please remember this morning to hit the like button. It is Like Friday today. Also, if you can hit the subscribe button as well, that would be great. Just hit the subscribe button on YouTube, and that way you'll get alerted every time a new a new stream is set up and a new video is uploaded. I'd appreciate that. Anyway, find the subscribe button and hit it, folks. Uh, I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is pushing up through yesterday's highs in the S&P. Risk on sentiment across the board. The Nasdaq is at 109 points, up 109 points from yesterday's settlement, or 1.03%. Laggy. Broadcast is laggy. Let's see how many dropped frames we have. We're getting a ton of dropped frames. This is, let me check my bandwidth. 1 second. Google speed test. I'm on 100 megabit fiber. Yeah, I'm getting full bandwidth over here. So this is a YouTube issue. Let me put up the Periscope link for you, and you can hop on over to Periscope and check it out over there. Here it is. Copy. Here's the Periscope link. If you want to get over there, that may be a better platform for today. The downside of Periscope is, of course, it's limited to 720p, so lower resolution. So there you have it. Anyway, hopefully it gets better. It really should be running just fine. It seems like it's a YouTube issue. I have good bandwidth right now, very low jitter. Anyway, the Nasdaq is up now 112 points, or 1.07%. The Russell's up 9.5 points, 0.65%. The S&P up 19 points, opening in a gap today versus yesterday's RTH session, up 0.6%. And the Dow is up 122 points. Gold is back at 1808. It has been stuck in the 1808, 1818 area for some time. The laggard today is the U.S. dollar index, trading at $96, 9.5 cents, down 22.5 cents, or 0.23%. I want to remind you all that crude oil, if you have not seen my post on Twitter, crude oil is trading September now. You should be rolling. The volume will push through in September today versus yesterday. The premium difference in crude oil is 18 cents, so you'll have to back adjust your crude contracts by plus 18 cents to avoid a non-existent gap there. So anyway, crude is U0 or U20 as a contract starting today. Crude is down 5 cents, trading at 40.88. Crude is completely imbalanced, has been sitting in the same area for quite some time. Let's take a quick gander at what is going on around the globe. Really, coming in this morning, there's the most important thing I think that's on the geopolitical or macro calendar or within view is the aid package by the Eurozone. This is huge. European leaders gather for crunch talks on massive coronavirus fund. The expectation for this passing is 50-50 Duh. It'll either pass or it won't, but it looks like it's split down the middle in terms of those who are for it and against it. The package here is worth a lot of money and could make a big difference. 750 billion euros or $855 billion to aid various governments in Europe as a result of the pandemic. Um, and then also it came out that the Fed's balance sheet has topped 7 trillion. That's trillion dollars. Holy crap. That is a lot of money to put out. And there is still a surge. The US hit another record increase in one day, a global record increase in one day, topping 77,000 just in one day yesterday. And of course, this is being blamed on testing, which to me, it seems like tests 100% of the population so you have an idea of what's going on and then report those numbers and get it over with, as opposed to talking about not testing and to slow down testing and to stop testing. It's as if we're suspecting we're pregnant and we're trying to avoid the pregnancy by not taking a pregnancy test. It's just dumb to me. Anyway, I'll step off the soapbox of political crap, but it's infuriating how this thing is being managed. Anyway, here's where so that's where we stand geopolitically. Those are the key items today that are in play. The recovery plan is a big piece that we need to pay attention to. It'll continue to be on the news for the next few days. In terms of what's up for today, we did get some numbers out of the Eurozone. You can look those up. I don't need to regurgitate here. Building permits came out today lower than the expectation of 2.5% for June. And the number also came out lower at 1.241 million versus 1.25. Not too bad a miss. Housing starts was outstanding. Expected 12.9%. Priors 4.3 came out at 17.3, pretty strong. Today we get a pretty important number at 10 o'clock. At 10 o'clock we get Michigan sentiment at 10 o'clock, expecting 73.4. This could be a mover. A lot of times it is 73.4, the prior 72.3. So it seems to be stabilizing sentiment. The University of Michigan study, it's not just a sentiment for Michigan, it's a study that's done by University of Michigan, I believe, and it surveys the country. So pay attention to that. 10 o'clock, that wraps up the numbers. That wraps up the numbers for today. Let's take a look at what was expected yesterday versus what we got. Yesterday was just a massive chop fest in the indices. In case you trade something else. Yesterday, the main expectation was that since we are opening, remember this is RTH, this is the prior session RTH right here. I've actually clarified that better on my charts. I've darkened the background for the RTH versus overnight since I'm shifting into 24-hour sessions and displaying those as opposed to splitting the RTH from Globex and talking about those separately. The volume in Globex is becoming too great for that to continue. This has kind of been a debate for the last 12 years that I've been exposed to the online community and the public. Why aren't we looking at the full Globex session? There's something wrong with YouTube, I think, because it shows 300 some viewers versus the usual 660 or so live. Very odd. Seems like people are not able to connect or something. So anyway, so this is where it stands. The expectation yesterday, since we were opening at the lower end of the range and we have this V-bottom rejection on Wednesday, on Wednesday's trade, yesterday we was expecting another test and a V-bottom and a push back up into the high volume node at 33.18. The secondary, so that didn't work at all. That was just total garbage. Market did not like that at all. The secondary expectation is an open that pushes into towards the 3205 and then is unable to continue and would test down into the overnight low of 3188.50. And so that situation there did not happen either. This was about as close to reality as possible. We did not extend down. I expected it down in the cluster of 3175 by the end of the day. Here's what actually happened. I don't know what's going on with the feed, but my CPU shows 13%. This is a very powerful machine, an i7 9700 with 64 gigs of RAM and a high-end video card. So it's very odd what's happening here. It does say frame rates are dropping. Sorry about that. I can't do anything about it at the moment. In fact, I don't think I can do anything about it since I don't control how the stream runs on YouTube. Anyway, so maybe the NSA has tapped in to listen to the feed or something. So here's RTH, yesterday's RTH. Okay, so you can see it's nicely darkened. You can see the pit open, the pit closed outline down here. Just so you understand the charts, I've simplified the charts quite a bit. And you can see that it ended up pushing to 3206. Remember, 05 was expected on the high side on scenario 2, and then I expected it to push down, test the 88, and then consolidate there, and then push into 75. That was scenario 2 yesterday. Was completely unable to do that and really stood firm at the top at 3205 and at the bottom at 3190. A very consolidated and compressed day. Very consolidated and compressed day. And as I said, well, I don't know if I said this publicly, but in the Convergent Head Trader channel, I talked about how we should look out for a break from here. And you can see that the overnight session tested the open multiple times and has started to go into imbalance and has finally arrived at yesterday's target. If you recall, yesterday's target on scenario 1, bada bing, bada boom, is right here, 33.18. And that has come in today at 32.1775. Sorry, missed it by a tick. And then we have the 05 still in play here. So the line in the sand for today is going to be the 05. Why is that the line in the sand? And by the way, I see the structure so clearly these days because the market is really auctioning well. The structure is that I see the line in the sand at 3205 because we see that number carry right through. And if we break below 3205 this morning, we're back in balance for the last 2 sessions, and then we end up getting trapped into the century figure volume, and we end up potentially testing down into 3190 again. So the price you want to watch today is 3205. This is what I will call the LIS line in the sand, the over/under line for the session. Here's what we had in the order flow overnight. Overnight, there was a fair amount offered at 32.11 and 12 right here, busted right through, and look at how beautiful this worked. Let me zoom in. This is something I introduced about 5 years ago, the concept of collisions, which I used to use in my prop shop, a term I used to use in my prop shop a lot, using order flow for scalping, and at that time we only had time and sales. A collision occurs right against the volume, and what does it do? It busts through. So Two things can happen in a collision in the order flow. A collision occurs, and what happens is you have an iceberg. We have an offer, and then you have an iceberg behind it, and the buyers get exhausted, and then it fails. So you end up with a collision failure. And then what it'll do is it'll advertise lower prices, retest, break through, or retest and fail with a lower high. Those are the kind of scenarios for it failing. And then the alternative is a collision and burst. So you end up with a stop run, as we see here, a buy stop run. And what does it do afterwards? After a collision, it comes back and retests that liquidity. That is for me, is a setup long. And this it's kind of pushing now. It's only good for about 3 points, but this just happened within the last hour or so. So looking at the liquidity, 3220. Remember the 20s? Talked about that on Monday or Tuesday. I don't remember, the days blur. So 3220 has a lot of liquidity in it. 3230, and then below we have that 95 area having pretty okay. Remember, I get full depth here, MBO. In my feed, so I'm seeing pretty far, and it's in real time, and of course it's on a live account. As you can see, the data is live and the account is live as well. So these are the key areas above. I believe this 3220 is likely to go this morning, and we're likely to push through. So that's the picture in the order flow. So let's take a look real quick at what we have for today. What do we have for today in the current conditions screen? So let's start out with scenario one. Scenario one, very likely the overnight inventory is 100% long, 100% long. So under that assumption, and because we are still in this kind of balancy area, we've been here before, the expectation is an open auction that responds, and I'm looking for it to base off of the 3209 area, 3208 right here from the overnight. This is the LVN, and it may be supported. So I'm looking for it to bounce from here. If not, then it's likely to bounce from 05 and then come right back up, test the overnight high, and then start working its way into this 3230. There is some volume here. Remember, the liquidity exists here, so expecting some chop around this area, but I'm looking for 3230 as the primary scenario as we squeeze shorts today into the weekend. Okay, Europe is expected to approve this package, which is a boon to the global economy. The secondary is an open that responds a little bit and then ends up pushing through, leaving us with a gap. It may respond to 3212, which was yesterday's high right here. And then it is likely to grind its way up into the same target. Okay, so that's scenario two. Friday on a summer Friday, the expectation is not so great that it will continue. So that's where that stands. Third scenario, because we're in a gap, third scenario is the sell scenario, is an open, test up, drive down into 3205, come back into the point of control of yesterday, test the 95, test the 90, take a bounce, and then potentially start to move lower and sell. This will be the surprise scenario and is likely to catch people off guard. Yesterday, yesterday's volume was 1.09 million, pretty decent volume. And a lot of that, some of that is likely to be flushed. Remember, the delta was negative all day yesterday. The day before, it just remained negative. There's some selling going on, and these guys are likely to get paid. There's quite a bit of them. So those are the three key scenarios, okay? Good luck today. I'm not sure why the stream is so bad. No idea. But hopefully this was helpful to you. I will re-upload, and I'll re-upload this file and make sure it's clean. Take care.